What's up, guys? Let's do a quick educational trade breakdown analysis video. So just again from the 4 hour, we are bearish. We've settled that out from yesterday's analysis. When we look at the most recent 20-day zone, we have that we did tap into the premium area above the 50%. Started breaking down structure towards the downside. So now we're looking for sells. So the whole idea is sell. So again, on when we start the day, we know that we are looking for sells. So since the morning, you need to identify which areas broke structure. So just if we just quickly replay price to this morning, this is where we started just before an hour before Frankfurt open. We see this leg down. There's our last order block, this black candle, where we broke structure towards the downside. So we broke all of the structure towards the downside. So now we know we are bearish. We're looking for that pullback into this area. Now we can apply multiple techniques and things to find then an area for us in this region to look for sales. So that's the most important thing, is that we need to be able to identify the 1H liquidity and only take trades from the 1H liquidity. In this case, we did not have any order blocks, so we only had imbalance. We only had the order block. So if we just see our price played out a bit, start pushing down, and we swept the liquidity below these lows. So it's important to know that we'll always be searching and grabbing for liquidity. But this is good because now we've created a previous high. So now we have an order block and a previous high. So this is now liquidity being set up in this area as well. So now the anticipation is that we move up from this area into the order block and then down into this area. We'll get into why this area in a bit. Another reason just is because we have now liquidity below this low, and that is then an area for us to search for trades. So getting back to where we are right now, we see price did tap into this order block. So now as price reaches into this area, we can anticipate a reaction or an area where price could potentially be reversing from. So for this, we need to drop to the lower time frames and set our sight. So now on the 50-minute, we can identify there's now our previous high. We have a order block in here as well, this one. But the main thing is we kind of need to see the origin of the move. Where is price most likely to reach to? So we know 50% of a 1 hour order block is a good bet. So if we place the 50% too, then we got a region. So we then mark out. Let's just use this tool. So that is 50% of the order block marked out there. But that's not always enough. We need some more evidence than that to refine the zone. So now we know that if we place a trade in this area, we need to have a stop loss well above the 50% because we know the 50% can be reached. We can't just place it in order in here and have it above the order block because we know there's a high probability that 1 hour in order blocks, 50% of that will be tapped. So that's why we can't just have the stop loss above that high. So we need some more evidence, some more structure, and more things inclined in our direction. So now there's also another thing that we can note is the imbalance between these two lines. So we can just place that line there as well. There's that small amount of imbalance in there. Now that reaction points for us. Let's just keep that one over there. So it's in there. I'm not going to place a line in there, but we're starting to refine this area. I'll just make it blue. Starting to identify a refined area for us to look for. So now we can also look at the what do you call it, the projection blocks. So if we look at this morning's London session, Asian session, there's our Asian session, and if we apply the projection blocks from the wicks, we have 1.5 exactly in that area as well. Because it's a pushing up market, we know 1.5 is a good bet. But if we also take it from the bodies, we have 2 and 2.5 in that area. So now we can just mark this up. So we know we have 1.5, we have 2.5. All the half increments is good when we have like an expansion in that range, where it's just when it's not just moving visually sideways, but when we have maybe an expansion in that range, then I use the look for one the half increments as well. So that is then we have here as well. Okay, just had a call quickly answered it. So now we have a refined area of where we want to see price react off of. We have the 2.5. We have, if we take the wicks, the half increment there exactly there as well. Just take the wicks. So this is then the hot zone. This is the zone where you want your price to react off of, and then we can easily then have our stop loss just above that zone. So that's what I did. Entry was in that area. Stop loss just above that zone, 3.3 pips, and then take profit is down here at this zone. Why this zone? Well, obviously we can take profit at this liquidity low, but this is then where the magnet is. This is where the cappuccino is, the coffee is. This is where we want to see price reach into during New York session. And then this zone is this full body candle with imbalance. And we broke structure in this area. So this is for a high probability area for me for price to reach. We have all of this liquidity resting above it, lows. And then also if we just apply the tool in this case, so we have that area, I'm just going to delete that now. If we take it from the upside, we have the high towards the low, the wicks, we have one projection block. And if we take the bodies closes on the 15 minutes, we have 1.5 as well. So 1 and 1.5, it all aligns in this area for price to reach this area. So that is then the take profit area. So I'm currently in this trade. I hope it makes sense and that you all understand the thought process behind it and why this area was chosen. So bearishness from this morning's analysis and just continuing with the progress process. Okay, guys, hope you all enjoyed it. Have a great day.